Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, 20s is considered to be the most enjoyable time in a person's life. We associate the 20s with being impulsive, having fun and taking the first step towards planning for the future. Now, this is when you start thinking about building your career. It's also a great time to look at your financial planning, of which insurance policies are an important component. But when we are in the 20s, insurance seems to be a distant option to be acquired at a later stage of life. But then, can you really rule out insurance in your 20s just because you're single and have no financial dependence? Is insurance a mere tax saving instrument then? What are the must-have insurance policies that you should not ignore and why? Now, in this episode, we'll try and analyze why it's important for you to consider investing in insurance when you are in your 20s. And joining us in the studio is Yashish Dhaya, CEO and co-founder of Policy Bazaar. Welcome to the show, Yashish. 20s, a very important time for any youngster. Why is it so important for them to seriously look at insurance policies?
I think like anything else, not too seriously, but they should start considering financial planning and insurance at an early stage. It's for a very fundamental reason. Risks exist. See, till a child is 18, he is part of his parents' policies. A very simple question is, why should that child, just because he turns 19, stop having a policy? He can't be part of his parents' policies, but he definitely needs to have an independent policy. Just like a 5-year-old can fall sick, so can a 19-year-old fall sick or a 20-year-old fall sick. And those things have expenses. And of course, the other reason is it's a great time to start almost any policy because they are probably at the lowest cost at that stage. The reason they're the lowest cost is because while the probability of falling sick is low in these ages, of course, the intensity if one fell sick or had an accident or something is quite severe. So I think it's also one of those stages. My mother always tells me this, that the time when you will not be able to save is once you have kids. So once you're married, once you have kids, you have responsibilities, then the incoming and the outgoing start matching. And once the kids are settled, again you have the potential of starting to save. So the initial years of saving, you can do whatever with those funds. Now the point is, if you keep 10-15% of it and do some savings, that goes a very, very long way. So of course, from all these perspectives, it makes sense to start as early as possible, and 20-25 is a great time. Plus the tax advantages exist just as much for a 20-year-old as they exist for a 40-year-old. So there is, one has to take advantage of those tax benefits.
So a company recently did a survey and which said that people in the 20s and even in the 30s feel that insurance is really for those who are older, maybe in the 40s, 50s, 60s, and so they don't really look at it seriously. I mean, what would you say to that? Because is that a perception, or is it?
I will make two statements, one after the other, which should kind of give out the importance of this. So if you wanted to have a pension, if you start at 30 years versus 20 years, you need to put in only half the money every year or less than half the money every year if you start at 20 than if you start at 30. So it is the individual's choice. Would they like to pay half the money for their pension plan throughout their life, or would they like to pay double the money? If you start at 20, you will pay half the money. Even something like 2,500 rupees every month saved for a 20-year-old will end up with 6-7 crore rupees by the time they retire. Now, that is something that one doesn't think about. Regarding any of the other products, very unfortunately, and it is a worldwide phenomenon, not just an Indian phenomenon, the maximum number of accidents actually happen between the age of 25 to 30-year-old. In India, we don't have age-based car insurance and motorcycle insurance premiums yet. You have them in other countries. So in the UK, for example, where I lived for a long time, they obviously have, it's the person who's covered, not the car that is covered, because the person who drives, right? And younger drivers have a higher insurance cost than older drivers, and the primary reason for that is there is a higher risk associated with younger drivers. Whether they are more aggressive, whether they have less experience in driving, Both things put together. I'm not saying one is true or the other. So clearly from an accidents perspective, there is a lot of accidents. Go to any hospital and have a look around. It's not like it's just old people. There are a lot of young people also there. So it's just a belief that we have that we don't need insurance. When one needs it, I run a company, it's got about 1,500 people. Every month there are 3-4 people who come in and say, can we withdraw some money in advance? Can we take 2-3 months salary in advance because we run out of money because of some hospital bill or the other? And that's a continuous phenomena. And our average age is about 26 years. So, So
that's the key that, insurance
so the cost does come. It's just, you may assume it doesn't come. And from a financial planning perspective, there's a massive advantage of starting
So talk about that a little bit. We'll get into, the main portfolio of a 20-year-old in terms of insurance, what it should be in right after this. But you talked about savings. You said that if you start investing now, whether it's in an insurance plan or there are huge financial benefits. Go into that a little bit for us.
Sure. Let me start by a very small example, a practical example which people can see for themselves. By the time I was 30, I had been saving since I was 20, and by the time I was 30, I had saved enough to buy a few shops. Those shops gave me rental income. Now the amazing thing was the rental income was higher than my salary. So by the time I was 30, and I didn't have my father was in the army. By the time I was 30, I had these shops which are giving me income which was higher than my salary. What did that mean for me? The salary was no longer critical for me. So I could take higher risks with my career. I could go ahead and become an entrepreneur because I could afford to live without a salary for 1 year. The amount of flexibility and freedom one attains if you start saving early is incomprehensible, because in those years when you've got that 5-7 years of experience, you can take very significant risks with your career. But however, let's not go into a specific example alone. Very practically, if one wanted to just save for their pension plan, and let's say things are going to be costly as one grows up, you are looking for a pension plan that gives about, let's say 30 years from now, about 30 lakh rupees a year, which in today's terms, just so that one doesn't think it's too much, in today's terms that's like 5-6 lakh rupees. So 5-6 lakh rupees a year is the normal pension, about 40,000-50,000 rupees a month. That is what 30 lakhs in 30 years time is going to be. So if you wanted to collect that kind of a pension, if you start as a 20-year-old, you need to invest only 2,000 rupees per month. But if you start as a 30-year-old, you need to invest 5,000 rupees per month. It's that simple. The first 10 years are that powerful. Let me give another example. If you started investing, let's say 5,000 rupees a month at the age of 20, and you stopped at the age of 30, and you never invested again, you will still have that 30 lakh rupee pension. However, if you start at the age of 30, all the way till you're 60, you will keep investing that 5,000 rupees every month, and you may still not have the same pension as the person who did the first 10 years. So a simple rule of thumb here is, and whoever wants to go into the mathematics of it, we can. If you invest in the first 10 years of your career and never again, you are better off than somebody who does not invest in the first 10 years but invests thereon for the rest of their life. That is the power of investing early. And it's not a big amount that one is talking about. What one is saying is, if somebody is earning 20,000 rupees, they invest 2,000 rupees, 3,000 rupees. If somebody is earning 1 lakh rupees, they invest 5,000-10,000 rupees, maybe 10,000-15,000 rupees. So that money can be made available, and it is not a very significant amount compared to the compensations that people have.
So intrinsic benefits of investing early
are huge.
Right.
As I said, both those examples, you can invest half, less than half, or you can just stop investing once you're 30.
Right.
And both ways you'll be better off.
Right. And now let's go into the specifics. Let's talk about the portfolio that a 20-year-old needs to have in terms of insurance policies. What are the critical categories that they must invest in?
So I think as early as possible. In fact, there is no age at which a person must not have a health insurance policy. So health insurance policy is critical. Having a plan which allows you to cover personal accidents with a significant amount is very critical. And I'll explain why. Life insurance per se is not important. to somebody who's in that age, because in a bulk of situations they won't have dependents. Mostly people get married about 28 to 30 in the country on average, one is talking. And so in that age they won't have dependents. However, if one gets disabled, which does happen to a lot more people than people expire at that age, then not only is there a loss of income, but there is also the cost of treatment. And in my mind, economically, disability can be almost more expensive than death. So having a very significant disability cover is very important. They don't cost too much. Also, coverages for critical illnesses. Not all critical illnesses, because some critical illnesses come with age. So let us say diabetes, etc., will usually set in by the time you're about 40, if they were to set in. However, diseases like cancer don't have an age. They can come at any stage. And having a coverage for a disease like cancer is very important at an early stage. Also, it's very low cost. It costs about 1,000 rupees to cover up to 1,000 rupees a year, so about 80 rupees a month to cover a male who's 20-25 years old. So my question is, why wouldn't one take that cover? The other part is cancer does not, there are people who've been, sports legends and they've had cancer. So it doesn't look at whether you are unfit, fit, what you eat. Right. It just, if it's there, it's there.
Manifests itself.
It manifests itself. So I think having cancer cover, having a health cover, having a disability cover are important. All these covers put together should not cost most individuals more than 1,000 rupees a month. No way will they cost 1,000 rupees a month. And then if they have savings, it will be really good for them to start investing early. Start investing in market-linked plans because they have time. India is a growing country. It's a young country.
So ULIPs is what you're talking about.
ULIPs, what I'm talking about. And the reason I'm saying that is they're the lowest cost product in the market today. Whether you look at mutual funds, whether you look at investment products, they're the lowest cost product, and they give you the entire benefit of the market growth. Over a 40-year period, somebody who's 20 is going to retire when they're 60. There's 40 years to go.
So that also has that life insurance component.
That has a component of life insurance, but that's not the reason I'm suggesting it. I'm suggesting it primarily from an investment perspective.
Right.
I think it's going to give them the best possible investment and the tax benefits that no other product will give, because it's tax exempt at investment. All the income is tax exempt, and when you take the money back, it's tax exempt. Over a 40-year period, if you just look back 40 years, the Indian stock market had not even started 40 years ago.
Right.
And when it started 100 points. Today it is almost 30,000 points, so 300 times more. Over a 40-year period, you're going to see that kind of growth you have seen in the past. I think no debt solution will ever provide that. So I think investing early, health cover, disability cover, cancer care, I think these are the products that a young customer should have. And if they obviously have a bike or a car, then that is obviously to be insured.
Right, Yashish, we have to take a short break, but when we come back, we're going to be discussing investments and insurance as far as 20-year-olds are concerned. Very important time of your life. But you can write your questions to us at queries@policybazaar.com, and we'll see you shortly after this break. Keep watching Policy Bazaar.
Hindware Italian collection. Bathrooms that you keep admiring.
Kent RO है डॉक्टर्स का recommended number 1 water purifier.
Kent RO से पानी में घुली हुई अशुद्धियां भी निकलती हैं.
Kent देता है सबसे शुद्ध पानी.
भ्रष्टाचारियों की तमाम साजिशों के बावजूद केजरीवाल सरकार ने रचा इतिहास.
माननीय अध्यक्ष महोदय, मैं वित्त वर्ष 2015-16 के लिए सदन के समक्ष बजट प्रस्तुत कर रहा हूं.
देश में पहली बार शिक्षा का बजट 2 गुने से ज्यादा बढ़ा. अब दिल्ली के हर बच्चे को मिलेगी बेहतरीन शिक्षा. स्वास्थ्य का बजट 1.5 गुना कर दिया गया. दिल्ली के सरकारी अस्पतालों की हालत सुधरेगी. ट्रांसपोर्ट और प्रदूषण की समस्या का होगा समाधान. क्योंकि सड़कों पर उतरेंगी 10,000 नई मॉडर्न बसें। महिला सुरक्षा के लिए बसों में मार्शल की तैनाती। कच्ची कॉलोनियों को पक्का करने का काम शुरू। बिजली के दाम आधे, पानी के बिल माफ। कॉलेजों और गांव से होगी फ्री वाईफाई की शुरुआत। युवाओं के लिए 1 लाख से ज्यादा नई नौकरियां। किसानों की जमीन की कीमत 6 गुना बढ़ाई। वो परेशान करते रहे, हम काम करते रहे। यही है केजरीवाल सरकार का वादा, जो कहा वो किया।
Casper! Come here, baby. Come here. Hey. You don't want to eat? Casper?
Casper! Hey, baby!
Who's this?
Hindware Italian collection. Bathrooms that you keep admiring.
Welcome back to Policy Bazaar. I'm Arjun Bhagat and with me is Yashish Dhaya. Now, Yashish, we talked about health insurance. You talked about it at length. A lot of youngsters who join the workforce in their 20s get group insurance covers. Now, is that good enough, or do they should they still look at an individual health insurance policy?
See, most of the individuals who are taking group cover will, if they'll have a look at the group cover, will have a 1 lakh to 3 lakh rupee cover, which in any serious disease will not be sufficient. It is good that they have a group cover. I would suggest for them to take a super top-up. A super top-up is a product where you take, suppose your group cover is 2 lakh rupees, you take a coverage from 2 lakh to 10 lakh rupees. At that age, at that young age, the cost will be absolutely abysmally low. It will be about 200-300 rupees a month is what the cost would be. And your coverage would have gone all the way to 10 lakh rupees. Now, the good news is that 8 lakh rupees extra that you get will also cover any critical illness or whatever else. So your dependence on the company cover will be lower. The better part of it is, as you keep this cover for the next 10-20 years, in case a pre-existing disease develops, which is today not a big worry for you, but increasingly we are seeing, because of the lifestyle we have and because of the pollution and because of the food, etc., and the issues that are happening there, we do see a lot of diseases setting in quite early. In case a disease does set in, the company will have no right to refuse you the cover. So you won't need to go through a medical. We hear all the time that somebody can't get an insurance because they've got some medical condition. In your situation, because you've purchased that super top-up cover, you would not have that particular situation. Also, if you were to change a job, etc., you can always try and take the first 2 lakh rupees of cover. Or if you were to start an entrepreneurial journey like I did, at that time you have to obviously have your own cover. One is working before one starts that.
Right. From a larger perspective, what advice would you give, youngsters as far as financial planning is concerned? And how important is, making provisions for those investments that you're going to be making? Yeah,
I think at that age, we're all having fun. We don't want to, but at the same time, I think the youth is getting quite smart. They're getting quite savvy. They do want to consider about their future, and I think it's smart to think about some of these things like health insurance, disability, etc., and buy the right products. I would certainly advise stay away from the products which are not very useful to you. So making those smart decisions and not being pulled in just because somebody asks us to do something is, I think, quite good. And it's not uncool, and people can spend not too much time. I think a couple of hours is enough to make your decisions, and you could revisit them once every 3-4 years. So it does not need to take a huge amount of your time. And you're at that beautiful age when most of this can be done online. You're most electronically savvy, so you can do your research and purchase a plan which works for you. And at any stage, if you want to change it, you can still change it, because you've got quite a few years before the change overs start becoming difficult.
And what about other investments? So insurance is on one side, and we've discussed that at length. What about other investments that they can make?
I never actually mentioned insurance as an investment. I think what I mentioned was equities as an investment.
Right.
And ULIP being the lowest cost mechanism for that. Of course, real estate is a fantastic investment to make. And the reason I say that is because it's so illiquid. Once you buy it, it's quite difficult to sell. It's not very easy to
So it remains with you.
sell. So it stays with you. You know, one of the problems with equity is you can sell it anytime, and you get jittery, and every time you need cash, you kind of use it. Whereas assets sort of stay with you. So I think real estate is another asset which is good to carry with you.
Right. Well, we've got questions from our viewers. We've got Seema Rao, who's 66 years old, and her husband is 69, and would like to know if there are any life and health insurance plans for senior citizens.
There are lots of health insurance plans. Almost every company has a senior citizen health insurance plan. The point is, with the health insurance plans, you would usually have some kind of copay, etc. The senior citizen health insurance plans have some component of copay, and they're somewhat limited. But if you're keeping fit, these days there is a very strong chance you'll just get a cover from an insurance company. You will have to undergo medicals, and if the medicals turn out to be okay, you'll just get the cover, which will not have any copay, which will not have any restrictions, that will stay with you for life. So definitely go for that. Only thing I would advise is, since both of you are above 60, take separate plans. Do not take a combined plan, because were one of you to contract a disease, then the other person's policy will start getting impacted by the one who's contracted the disease. So just keep your plans separate. It might be a little more expensive. It might be about 10-15% more expensive to start with, to have individual plans rather than a group plan. But at the same time, I would certainly advise that.
Right. And Mrs. Rao also asks us about investment. She's saying all her money is in bank deposits, and she's asking whether Postal Investments would be a good option for her.
I think bank deposits is good. Stay with the bank deposits. It's less stressful. Is what I would say. And whatever advice people give you, that invest in this insurance plan or that insurance plan, etc., please take it with a lot of caution. People are advising you for their own benefits, not for your benefit. I'd say FDs are good. Nobody's going to sell FDs to you. So I think they're good. Stay with them.
Right. With that good advice, we go to Siaram, and he says he has two kids, age 2 and 3.5 respectively. He would like to know if he should be investing in a child plan right away, or should he wait?
No, I think it's a great time to invest in a child plan as early as possible. See, the reason you invest in a child plan, why I'm saying don't invest in just a ULIP or just a FD, the reason one invests in a child plan is because it also has a risk component. So you start saving early. You would be able to build up a decent corpus in the next 15 years, 16 years or so. But at the same time, should something unfortunate happen, whether it's a disability, whether it's a critical illness, whether it's death, and the fact is these things do happen, then the money is still secure, and the child still gets the benefit, and it's protected for the child, and the child gets at the right age. That's the biggest advantage of a child plan. And these days, so what I would advise is take a ULIP with something called as a waiver of premium. There are quite a few of them available, but a ULIP with a waiver of premium is basically a child plan. So take that.
Right. We've got Bharat Talwar, and he says he has an Oriental Mediclaim policy, and he'll be retiring next year, and feels he should be investing in another health plan that offers cashless Mediclaim facility. What advice would you give?
I think he should apply as soon as possible. I'm just trying to check whether this is a corporate policy or not, because the way it's being mentioned, it seems like it's a corporate policy. But nevertheless, if you do want to take up a plan, I think today is as good a time as any other. So please go apply for it, get your medicals done, and see very quickly whether you will be able to get one or not, rather than decide later. And figure out that you may not get one. So do attempt as soon as possible.
Right. We've got Abhinav, who's 30 years old, and he would like to know whether it is beneficial to invest in multiple term plans. Can his family claim benefits from each policy in case of an unfortunate death?
Certainly, if you have multiple term plans, the benefit is cumulative. So if you have 3 plans of 50 lakh rupees each, then the benefit is 1.5 crores. It's not like a health insurance plan where the benefit is the same. So I think sometimes having multiple plans helps. It's not from a risk perspective, because as long as it's a genuine claim, Every company will pay. I don't know of a single company that does not pay a genuine claim, as in there was no fraudulent declaration or no misdeclaration, and at the same time, I don't know anybody who does not pay in that situation. But so it's not for that reason. However, split claims can help, because as we go through different stages of life, you may have increased your cover or decreased your cover, and you may not want to change as you get older. Premiums go up. You may not want to, change an existing policy and rather just take a new policy. And it does not necessarily have to be a policy of the same company, because premiums may be different.
So do you need to inform the other company about?
You don't need to inform the previous company. You need to inform the company you are buying from now that you already have a cover. Just to put that in perspective, that is not a reason why you will not get a claim. You should inform. In good faith, you must inform. But that is somehow missing to declare that is not a reason why you would not get a claim.
Right, Yashish, that's all the time that we have. In terms of our quiz question, last week we asked you, insurers allow maximum of how many days as grace period for renewing health insurance policies? The answer is 30 days, and the winner is Arun Gupta. Now, this week's question is, what does IDV in motor insurance stand for? Now, you can send in your entries to queries@policybazaar.com. Thanks a lot, Yashish, for joining us and clarifying that important component of investments and insurance as far as 20 years old are concerned. And we'll see you next time with another episode of Policy Bazaar. Goodbye.